The tech industry is still whirling with excitement over the news that Facebook filed for its IPO. The social giant hopes to raise $5 billion or more, which would make it the largest initial public offering from an internet or technology company. The filing, however, revealed information that had never before been made public, raising some issues about the future of the company. And the big question is, can Facebook maintain its growth and global business while pleasing advertisers, users, and soon investors? So at this time, we're going to bring in Francis Gaskins, a partner at IPOdesktop.com, who specializes in IPOs. Thanks for joining us today, Francis.
Yes, thank you.
You're very welcome. Well, let's first of all talk about the potential that Facebook has with its IPO. What are your initial thoughts?
Well, they'll probably raise the $5 million. I think the question is, what was in the S1 filing that people hadn't expected? So, they'll end up with a lot of cash, and can they really use that? And what's happening with their growth? What's happening with their last 4 or 5 quarter growth, and what does it look like for the future?
Right. Well, as for the financials, rumor has it that the valuation of Facebook is somewhere between 75 and 100 billion. Is this reasonable in your opinion?
You know, after looking at the filing, I'd have to say the answer is no. And the reason is, at $100 billion market cap, Facebook would be selling at about 53% of Google's cap. So they're both basically in the internet advertising space. So if you look at the comparisons, Facebook had revenue of $3.7 billion, and Google had revenue of $46 billion. So Google has about 12 times the revenue. Facebook had after-tax earnings of $1 billion. Google had after-tax earnings of $11 billion over the same time period. That's 11 times. So those metrics suggest that 10, 11, 12 times larger than Facebook, that Facebook is not worth 53% of Google.
That's very interesting. Well, based on the information that was released, the revenue, the compensation, what does it tell you about the company as a whole?
Well, what it tells me, if you look, Facebook did $1.7 billion in revenue in 2010, and $1.9 billion, and $3.7 billion for 2011. So people think that's great growth. But what you really need to do is look at the last 4, 5, or 6 quarters to see what the rate of growth is. And interestingly, December is seasonally high for Facebook. So if you kind of discount that and you look at what happened for December 2010, March, June, and September of 2011, oddly enough, what you'll find is that the operating earnings were flat, the net after-tax earnings were flat, and the profit margins went down. So the profit margins now are in the 24% after-tax range, which is about what Google's is. So frankly, I did not expect to see a sequential progression of flat earnings. I mean, I was quite surprised at that. And also, if I looked at those numbers and Facebook was not attached to that, I would kind of say, well, it's okay, but not great.
Well, another issue is related to privacy. Do you think that it will have the same type of problems that other companies like Pandora and Zynga had when they filed? Well,
Facebook has had a reputation of kind of doing something and then apologizing for it later. So
Right.
So it doesn't have a very good reputation in that area.
Absolutely. Well, how risky of an investment would you consider Facebook to be, and what are the biggest risks for the company?
It's hard to say in the valuation because there's no way the $100 billion is out the window. I mean, that was kind of a pipe dream. I think that was indicative of the ego of Zuckerberg, the CEO, who will end up controlling 50% of the company. And there were a couple other things that I noticed that indicated, I think, that he ended up, and that crew up there has started to believe their own press releases, which is always very, very dangerous. So the quarters that were flat were without real competition, and Google Plus may have 300 million users by the end of the year. So this is a different environment. It's a much more competitive environment, for them.
Right. Well, do you think that it has a solid strategy for being profitable, enough to appease Wall Street going forward?
No, I really don't. They have 845 million monthly average users. Of that, 425 million are mobile users. And the thing is, right now, they don't have a revenue stream from their mobile base, and that base is increasing. So I think that's one of the reasons that I think they missed their projections for 2011. Somebody was projecting, eMarketer around the summer of 4.3 billion for revenue for Facebook. It came in 14% lower. So something really not good happened to them, on the way to collect advertising. The other issue, I think, is that, okay, fine, they're an internet advertising company like Google, and the compound growth rate for that market segment is 14, 15, 16% for the next several years. And that's not a high multiple market growth at all for them. Another issue I'm concerned about is, in terms of presentation, is Facebook presenting itself as a technology company. It's not a technology company. It's a consumer of technology, which is different. They're offering a service, and they're not selling technology. Apple sells both services and technology. Sometimes you say, what's new with Apple? And that's always an interesting question, at least for me. And when you say, what's new with Facebook, a lot of people say, well, who cares?
Right. Well, how do you think the company will change as a result of being public? For instance, how will the management have to change it, and specifically Mark Zuckerberg?
Well, I think he's going to have to be realistic in terms of his forecast. The revenue estimate I was mentioning did float around last summer. It got viral. I think that what he should have done is kind of damp that one down, not let it get out. And I know at the same time that they were selling stock at a $75-80 billion market cap. Then also there were estimates going around that Facebook would have a 60% increase in revenue this year. I think they'll be hard stretched to do that. I think Wall Street looks forward, and the credibility of management's forecast is very, very important. I'm sure it'll be counseled by the underwriters and by other people to overperform, to underpromise and overperform. So, but I'm not sure he's done that yet.
What about the issue of keeping talent? A lot of the original employees of Facebook are no longer there. So will that be a challenge as well going forward?
Well, it'll be a little bit, sure. I mean, he was out saying the other day that there could be 1,000 millionaires at Facebook, which and if they all sold the stock, that would be $1 billion. But that's not much compared to the market cap. People always churn over in software companies. They've had a good run. They've gotten a path going forward. I think a lot of people would be happy to work at Facebook given this economic climate. So sure, there'll be a churn with their employees.
As far as the timing goes, in your opinion, was this a good time for Facebook to file?
There's been a lot of discussion about that, and some people say it's a perfect time. I've said for quite a while I think they should have IPO'd last summer. That way they would have been the first in this area, and they could have defended their multiple. Now, what is happening is Google is competing in the space, and they're putting out the numbers where, as I said, there's kind of a question as to where's the growth, basically. Where is the growth for the last 4 or 5 quarters? Looking at it on a quarterly basis, it's not there. And Facebook is going to be in the quiet period, so there's going to be a lot of people talking negatively about the company, a lot of the analysts, and Facebook will not be able to respond at this time.
A lot of people are also talking about the impact of the IPO on the economy. What are your thoughts on this?
It's when the Facebook shareholders sell stock, it'll generate more money for California, and then the question is, are the politicians going to treat that as a one-time payment or recurring income? But it'll definitely help the economy because there'll be a lot more money flowing around in the tech area, I think.
All right, Francis, great insights. Thank you so much for your thoughts. We really appreciate it.
Thank you.
You're very welcome. Reporting for WebPro News, I'm Abby Johnson.